Hey traders, this is Ron at Market Tamer. Happy Tuesday. Hope you had a great day. As always, everything in this presentation is for educational purposes only. We'll lead out here with the SPY ETF. The spiders down 1.53% over $4, so over 40 S&P points. And what we can see here is that little bit of a plunge is starting to develop, or the beginnings of maybe a bigger drop. We could not get above that red line, which is the 20-day EMA that we talked about in yesterday's video. Well, now we gapped a little low, we gapped lower and then closed near the lows of the day. At this point, you might want to use a couple stages of alerts. First one is 285. I would want to be aware if we close below there. The second one, we could take some of these lows from 814 and over here to 85. That's essentially 284. Then if we take out 282, so 285, 284, 282, there's nothing left to stop the stock from a technical basis from coming back down to that high wave doji on June 3rd, which is 274, which between where we're at now and then is a huge drop in the S&P. And that could happen in a couple days, 8 days, 2 days. If you look back over here, we went from over 300 down to 285. That was a 15-point plunge. If we take, let's say, 290 minus 15, that gets us down to 275 as well. So the distance is sort of the same if it keeps going. Right now, it's not looking good for the bulls and it's looking good for the bears because volume was above average today, almost 100 million shares. We take a look at the diamonds, down 3%. I'm sorry, down $3, 300 S&P, 300 Dow points, 1+%. Same thing, gap lower, closed near the lows of the day. Here, I really do think the low from 10.3, 257 will just round it off. And then, you start getting down to 255. There's only one low there. And then it's back down here in the upper 240s. The Qs, really no different. Gap lower, finish the lows of the day. Here you got to watch 182, multiple touch points. Then the last line in the sand is maybe 180, and then it's back down here. Volume here on the Qs, pretty much average. Let's just go back to the Dow and check the volume, pretty much average. But the SPY is the one that saw above average. So again, bears have the edge. We might be starting to get a little bit of a drop here. Here is Scott's Miracle-Gro, SMG. And I had a question on this one because it's been in a nice uptrend going back for many, many months. In fact, really since it got above the 50-day back at the beginning of this year, it's been on a nice run. But when it hit the 50-day, while it wasn't perfect and it did close below it, we tried to get back up and there was no sustaining power. Please keep an eye on your stocks if your charts look similar to this. Because once you lose a big moving average in a big way, like the stock just didn't get a little below it. It went quite a bit below it. We've never gotten back above the 50-day at this point. There's different stocks out there, which we're going to look at some others here shortly. But when you see that breach after a really nice uptrend and then attempts to get above and you can't, the bulls have lost their edge. Now you have to be on guard. And the moment, using Scott's Miracle-Gro as an example here, the moment we start getting below these lows around 99, no real support till almost 86, 85 down near gap support. MasterCard and Visa, sort of a similar situation to Scott's Miracle-Gro. They all sort of go together here. We'll start with MasterCard. Once January began, the stock was at 190, it goes to 290. In the face of, the world's going to end. Just please, I keep saying this because I get a lot of comments and emails on it. Just stick your fingers in your ear and ignore all the news out there. I prefer to teach, trade what you see, not what you think. And once the market rebounded, MasterCard went up to 190 or 290 from 190. But then the first signs that there was trouble. But anytime you get a big red bar and you close the lows of the day, back-to-back days, if I go ahead and zoom in here, you'll see what I mean. We gapped up a little bit, closing the lows of the day, big spike in volume. Traders were exiting. They were selling to anybody else who's trying to buy whatever good news on this breakout. The next day, same thing. Ever since we got below the 50-day on big volume, back on September 10th, it's almost a month from now, there has not been one solid day close above the 50-day. So imagine you're holding this stock, again, of course, paper trading. You see this bearish engulfing follow through. You can't get above the 50-day. It's really difficult to be bullish here from a technical perspective. Some folks laugh at technical analysis, and maybe they just never had anybody that was able to show them I want to say show them the light, but show them the value of it. Candlesticks really show how traders want to be bullish or bearish any given day. If you accompany candlesticks with volume, I mean, volume is where people are putting their money down. Where are the candles on MasterCard finishing? A lot of them are near the lows of the day, and the red bars are beating the black bars. So there's more selling than buying, even on the days where there's the bulls are trying to pull a reversal here. This has all the hallmarks of, yeah, it's bearish. Yeah, the bulls, you lost your edge. It doesn't matter that back on Thursday, Friday, we had a nice rally. You never got through the 50-day, and now we're starting to roll over. And if you're a head and shoulders person, the head could be up there. It's a skinny head. A left shoulder may be here, and your right shoulder, it does not need to be symmetrical and match the left shoulder. That could be the right shoulder. And then the neckline, there's arguably two here. 270 could be somewhat of a neckline, but then again, maybe down here around 259, call it 260. We break below there, there's some support at 240, and then it's a long way down. The same can be said if we look at Visa, another trend change type stock. Here was the world ending in December. The stock goes, once it gets above the 50-day, it actually dipped back below it here. So let's go February, maybe 140, all the way up to 180. We lose the 50-day. Now this one is not as easy as MasterCard, right? Because we went right back up. But look what we never did. We never put new highs in. The volume never came back in a big way. Actually, the volume died off quite a bit. And then look what happened with MasterCard. And that's why it's also valuable to compare stocks in a similar industry. If they do the same thing, which MasterCard and Visa do. Bearish engulfing exactly when MasterCard did it. A second follow through day. Big spike in volume. This sucker can't even get above the red line except for Friday of last week. And then it quickly gave it right back. Look how the red bars are beating the black bars. So yes, Visa along with MasterCard, both technically bearish on the daily charts. Here, there's a little bit of an easier line to see. I'm going to say 169 on Visa. Below 169, that's a head and shoulders neckline break for sure. And then maybe the target's back down here towards 158, which is where buyers came in. Below 158, you're going back down towards the beginning of the year lows. And American Express, AXP, similar situation, except they've already started their descent. They already were coming down when MasterCard and Visa put the reversals in. So this stock here, when it lost its 50-day, got back above it, no new highs, rolled over. You take out those lows right here. What is that, about 120? Never got back above 120. And that's how funny this can be. You break, you come back up. Once you break the previous swing low, that's been now resistance. It was resistance in late August, again in early September. And it looks like on, what is that day there? 10-2. We had the plunge, now you're just consolidating. There is a little bit of support around 110, but then it might be all the way back down here towards December. Another question on Disney because of this pretty apparent head and shoulders pattern. The head's up here, left shoulder here, right shoulder maybe here. There's an interesting neckline right around 130, but because there's a gap up right around 128, which actually marks the low from earlier this month, below 128, we're talking about 50 cents lower on a closing basis, gap fill time, down to 117. Now, what would be amazing is if we get that plunge and that sets us up for maybe Disney having its annual rally starting at the end of October, beginning of January. So I almost forgot to do this. I wanted to do it earlier in the video, but please register at the bottom of this video. For Wednesday, we have less than 100 seats left now. We started the day, we were gone through half the seats. Now we're down to less than 100. There's a little more than 100 available for Friday. We oversubscribed. There's only 500 people that can be in the webinar room. So folks got locked out last week. This is what I'm going to show you. This is a picture off the financial website. There are two stocks that have 90+% historical track records. We're walking into that window right now. You need to know who these stocks are, who the frequent offenders, if you will, going up and going down. These are bullish ones. We're going to look at bearish ones too in case the market keeps going down. What you're also going to find is that even when the market sells off, there's some stocks that go higher. And you end up scratching your head saying, man, it would have been nice to know that because maybe you don't want to be bearish. Maybe you just want to trade bullish stocks. To me, I don't care, but maybe you're different. Well, bullish, bearish doesn't matter. When the market was selling off in May, there were stocks like Pod and Expedia and Cerner. Some of these went up as the market went down. And one of the stocks we're going to talk about tomorrow evening is what chart you're looking at right now. It's grayed out on purpose. I don't want to give the stock away, but we are entering this rock star window of time. Left side is what the stock has done. Right side is the probabilistic future price if the stock lives up to its historical average. This is not a couple percent move. We're talking between now and middle of December, almost 20% move is the average. You need to be aware of these stocks. So again, please register ASAP and lock in your seat. I look forward to seeing you there. Now, with that said, let me move on to gold and, GLD. There we go. Here's GLD. These questions keep coming in too. There's a lot of gold bulls out there apparently that watch the video. Now today you're back above the 50-day. Nothing has changed in my commentary from yesterday or the day before. We're just sort of waffling back and forth. If I come in here, let me do this. And we do drawing. And let me go in and grab the trend line. Here it is. I'm almost spaced out on that one. There's the upper trend line. And I'll come in here, do another drawing, and we'll grab this trend line. You sort of see what I'm talking about, right? This can be considered an elongated flagpole, and this is a flag. We're still in the downtrending channel. If I go to the gold miners, which is GDX, it's the exact same thing. I'm not going to draw the lines to save you time. Even though we were up almost 3% today, we still do not have higher highs, and technically we have ever so slightly lower lows. The same goes for GDXJ. These are the things that need to change for the bulls to get the edge. High, so far lower high. Here's a low, lower low, ever so slightly lower low. I could draw these trend lines in. We're still in the downtrending channel. We're going to need a bigger thrust higher and a taking out of a previous high for the bulls to regain that technical edge, okay? So there you have it. Again, at the bottom of this video, or if you were on our email list and you received this video via email, make sure you register ASAP, less than 100 seats available for tomorrow night. I don't do evening events often, so if you ever wondered about that, you're definitely going to hop on that because they're usually during the day, or sometimes we'll do a Saturday event too. So again, wish you guys all the very best. Look forward to seeing you at one of these events. You have any questions, you know where to find me, Care, C-A-R-E, at financial.com, or if you're over at Market Tamer, CS at markettamer.com. Have a great day, gang. See you later.